Good afternoon, everyone, and thank you for joining me. This is the non-farm payroll live trade. My name is Russell Shaw. I'm a senior market specialist at FXCM. You can reach me on rshaw@fxcm.com. Today is the 5th of May. Just going to bring up some disclaimers and then we'll talk a little bit about the trade. I'm going to bring up the high risk investment warning first. I'll keep that on screen. Good afternoon, Zanetta. Welcome. Thank you very much for joining. Thank you to everyone that is signed in. Okay, I'm just going to bring up now our market commentaries disclaimer. And we'll be looking at market scope, possibly trading views. Market scope, we're going to be trading on a live trade, a live account. Okay. So that will be done on market scope. I've got trading view open here. I've got the 2-year yield at the top. I've got the US dollar at the bottom. And you can see there's a fairly obvious correlation here. Movement there. Movement there, and then sort of a movement across and movement across. So the thinking is the non-farm payroll is going to affect the 2-year yield, the 2-year yield being a proxy for monetary policy, and that's generally what would lead the dollar. We're going to be trading euro-US dollar, dollar strength. So we'll probably then be looking to short the euro-US dollar. Dollar weakness, and we'll probably be looking to go long euro-US dollar. I'm not sure if we'll refer to this all that often, but I just got it up in case. This is the daily chart. It's too far out for our trade, so I'm going to go down to the hourly here, and we may use it, we may not. Let's take a look at the template. All right, so we've got a 1-hour chart on our left, euro-US dollar. It's got the pivots, it's got a stochastic, it's got the RSI. Then we have a 15-minute chart on the left here, second tab. And this, I'm going to go down to a 1 minute. So we'll be trading on the 1-minute chart, euro-US dollar. And we'll be predominantly focusing on the 1-minute chart. What's important is the pivot levels. Often when we do these live trades, it's the pivot levels come in as support or resistance. So we should just take note of where we are on the higher time frames and then concentrate on the 1-minute chart. Now, our tactics for today, our strategy, is going to be as follows. First of all, our stop loss, okay, is going to be 20 pips. Okay. Our take profit is going to be 20 pips. So we've got a 1-for-1 reward to risk ratio. But what we're going to try and do is we're going to try and trail the stop. So if we do get stopped out, it's going to be less than 20 pips. So if we can get out for less than 20 pips, or if we hit our take profit for 20 pips, we'll regard it as a successful trade. So trailing the stop or getting out at 20 pips. Okay, but at the very worst case is we'll get stopped out for 20 pips or thereabouts. Can I double check? Can you guys hear me? Can I just get a, can you guys hear me? See the screen? Okay, Zanetta, you can see, okay. Alwyn, okay, all right. Okay, Ian, okay, excellent. And we've got 5 minutes. Now we're not gonna put on the trade prior to the announcement. We're gonna put on the trade post announcement. And what we're going to do is we're going to wait for the initial impulse. So the initial impulse is either going to go up or it's going to go down. And then we're going to wait for a correction. So if the impulse up corrects to the downside, okay, we're going to try and get in on the correction. Okay. If the original impulse is to the downside, then we're going to wait for the correction, bounce up, and then we're going to try and get in on the correction. Okay, so that's the basic strategy. Now, the key is, well, how do we know where the turning point is going to be? We're going to use what's called reference candles. Reference candles are at least a 3-candle cluster. They can be complex. I'm just going to show you the 3-candle cluster over here. If it becomes a complex reference candle, we'll talk about that in the trade. But basically what we're looking for is a candle that's got the lowest low between 3 candles, and then the candle to the right needs to close to the close above the reference candle's high. Similarly, okay, if we're going to go short, we're going to look for a setup like this. Okay, so there we're going to get a candle that has the highest high in at least 3 candles, and the candle to the right of it must close below the reference candle's low. So that's going to be the way that we're going to enter. So first is going to be, so number 1, impulse. Number 2, correction. Number 3, we're going to try get in over here. Okay. Similarly, on the way down, first there's got to be an impulse, then there's got to be a correction, and then we're going to try and get in on the correction. So it's effectively the 3rd step that's going to be where we enter the trade. Okay, if there's any questions, go ahead and type those in, and just seeing if there's any other questions here. Okay, nothing else as of yet. Okay. Okay, we've got about 1 minute and 20 seconds. The forecast is for 181,000 jobs. Okay. What we also want to look for is the average hourly earnings, which is forecasted at 0.3%. And the unemployment rate is really a lagging indicator, but it's expected to be 3.6%. So that's what we're looking for. All right, let me see if there's any questions. No questions just yet. How much time? Okay, we've got 40 seconds or so. Let's go through to the charts. This indicator here, by the way, I didn't mention, is a stochastic. Let me just show you the settings. 15, 5. I'm only got the %K in. The %D we're not looking at. Okay, it should be 20 seconds now. All right, here we go. Oh, it's a lot of money going into the US dollar. So euro is being shorted here. US dollar is being bought. So there must be some strong numbers. Let's see if we can get the numbers. All right, unemployment's coming at 3.4%. Non-farm payroll is a big beat. It came in at 253,000, just waiting on the average hourly earnings. Okay, so it's very strong for the US dollar. And there's inflation here, 0.5%. So it's a big number for the US dollar. And you can see the US 2-year yield shot up US dollar shot up. All right, see if we can get in on some correction here. So ideally, trying to get, so here's number one. We're waiting now for the second part of our trade, which would be the pullback. All right, we just want to be patient now. Just let the correction show itself before we take a short position here. Those are big numbers. So the job market really showing resilience. And 253,000 is higher than the previous print, which was 236,000. All right, we're just waiting for the reference candle. Something like that. Okay, this is a potential reference over here. Okay, got another 30 seconds. We'll get the next candle. Let's just take a look where we are. Okay, so the S1's acting as support there. Okay, another 10 seconds. We'll get the next candle. Okay, so I've got a potential reference over here. So the initial volatility has disappeared. We're starting to move sideways. Okay, we don't quite have it yet. It's got to close below the reference candle. Okay, there we go. Okay, so we've entered a short position. Here's the big one. Here's the stop loss, and here's the take profit. And we want to try and get this stop loss down so that we, if we do get stopped out, it is less than 20. Okay. Okay, 17 seconds. We'll get the next candlestick. keep an eye on that stochastic. If we can get the stochastic to the lower quintile, we'll have the trade biased in our direction. So let's just see if we can get this stochastic down into the lower quintile. Okay, 35 seconds, we'll get the next candle. Here's where the support is. So we're going to battle with the support from the initial impulse candle. Okay, our take profit is right on the S1 pivot. Okay, let's start moving the stop down. Another 37 seconds. So we're right in the middle of a support here. Okay, I like what's happening with the stochastics. The stochastics coming down to the lower quintile. Okay, we caught a little bit here in the support at the moment. Okay, 5 seconds, we'll get the next candle. There you can see this, the support coming in. Okay, a bit of a doji, so a little bit of uncertainty coming in amongst the short-term traders. "15 seconds, look at the next candle. There's that doji again, still uncertainty. Okay, stochastic coming down nicely. Still on the support. I'm going to just move the support to there. Okay, there the sellers attacking the support. Still battling to break down, yeah. Another 22 seconds. Okay, they almost went under, and then a reaction. See if the sellers can push down again. Okay, another 3 seconds. Okay, so we're going to bring this down. We're going to make this into a break-even trade now. Okay, so we've got a slight profit there. Okay, let's pull the stop down further. Okay, so we're now in profit. I like where the stochastic is. 8 seconds, we'll get the next candlestick. Okay, it looks like we might be getting a reverse reference candle here. Getting pretty close to our stop loss. All right, and we out there for eight and a half pips. Okay, so we pulled the stop right down, and we got pretty close to the take profit, and then it reversed. So that was the trade for this month. A little better than last month. Last month it was on Good Friday, so that there was no volatility after the announcement came through. So not bad. Pity we didn't hit the take profit, but we'll take what we can. If there's any questions, please go and type those in. Any questions, type those in. This was a live trade on a live account. All right, guys. I think what we'll do then is we'll wrap up here. Please join me again next month when we trade the next non-farm payroll. Thanks very much.